Now, Bitcoin will do to banks what email ID did to the postal industry. Right now, Bitcoin feels like it's the internet before the browser. And it's also said Bitcoin is cash with wings. Well, what these three quotes really talk about is Bitcoin possibly is here to stay, whether we like it or not. And to get to know a lot more about it, we're going to talk about Bitcoins and what happens next in this episode of The Sound of Money.
Sound of Money with Santosh Sirur.
Hello and welcome to The Sound of Money, a show where we focus on financial literacy. We talk about government, macroeconomics, policies, and also about trends in the financial industry. And today we're going to talk about Bitcoins, something that's really coming up of age, something that's been talked about. Whether we know it or not know it, we want to know more about it. That's what it is. And to talk about this, I'm joined from Hong Kong by Josh Heileiczer, who is the managing director with Protiviti, Hong Kong. He has been having a fantastic career in banking and in consultancy and has specialized in anti-money laundering, compliance, sanctions, and even also a trusted client advisor. Hi, Josh, and welcome to The Sound of Money.
Thanks a lot for having me, Santosh. Your intro is too kind. Thank you very much.
Most welcome. So, Josh, ever since we started The Sound of Money, and this, in fact, is one of the next few episodes that we'll be talking about is on cryptocurrencies. So let's first, this whole talk about cryptocurrencies is more about, it's like has its own phases, ups and downs. The moment the value of the cryptocurrency increases, suddenly there's a lot of talk about it, right? The moment you have Elon Musk talking about cryptocurrencies, again, it comes into vogue. So even before we get into that, can we know what exactly is this cryptocurrency all about?
Sure. So, I mean, it's actually, I've been looking at it for a long time. I've probably been too cautious in not buying it because of some of the risks, but I wish I got in back in 2014 when I first heard about it. But Bitcoin has been around now for, I guess, about since 2008, 2009, really around the financial crisis. There is certainly some mystery in terms of how it's been created. So there's somebody named Satoshi Nakamoto. Nobody knows who Satoshi is. And he supposedly created Bitcoin, has a certain group of founding currency for that. And nobody knows where he is or how he started it. Has a number of uses. So how can you get Bitcoin? Well, the original way was to be a miner. And so mining doesn't mean taking things out of the ground. Mining means hooking up your laptop and solving some complex mathematical problems, which ultimately help the transaction and create transaction power for the Bitcoin to be transacted. And this goes for the other cryptocurrencies as well, Ethereum, Doggy Coin, which is one that Elon Musk just touted as well recently. They're trying to get it up to $1 from about 4 cents, I think, right now. So, that's sort of how it started. And then first transaction, I think it was around 2009, 2010, was somebody buying a pizza for 10 Bitcoins. Now, great deal today. I mean, if you got 10 Bitcoins for a pizza, I think that would net you over $500,000 US, because Bitcoin is at $56,000 at least today when we're talking, has gone as high as one. Before this year, I don't believe it ever had gotten above 20,000. And was a high watermark, went down for a while, and then has now come steadily back up. You hear about banks and all sorts of financial services companies looking to get in, whereas previously the market was very much limited to small bespoke exchanges. One of the reasons I started getting involved in it was because unfortunately there can be a lot of fraud and a lot of other issues associated with Bitcoin, because quite frankly, it has to be held on an exchange. And in terms of his being a means for transacting value, it's not great. You can't buy coffee. It takes a pretty long time to process the transaction on the blockchain, which is how Bitcoin essentially maps the transactions. It, essentially creates a chain of transactions so you can see how it is going forward and going back and figure out who owns it. A lot of times these exchanges or otherwise, in terms of how you got the Bitcoin or other virtual currencies, weren't tracking that. So you had poor identification of those people. So historically, you'd heard a lot of people using it for criminal purposes or other types of enterprises that might not be wholly legal in a jurisdiction.
Okay, so you brought a very interesting point about this pizza, right? So volatility is something which is very much associated with Bitcoin. So for example, how logical is that to make it as a medium of exchange? So for example, right? I mean, just like the pizza example as you quoted, if one Bitcoin is equal to US 57,000, as you say, and if I am supposed to get into a contract with somebody selling my piece of land, right? So today I sell it at X amount, but tomorrow there's huge volatility and suddenly the value increases or it massively decreases. So the medium of exchange and more importantly, the volatility, isn't that a serious issue?
Of course. I mean, this is a very big issue in terms of people taking it as currency. Now, it can work in both directions. Somebody buys a car for a Bitcoin or somebody buys a coffee for a Bitcoin, and then it goes up in value significantly, they might have paid double, triple, 100 times the price potentially. It's tough to say, right?
Yeah.
It's very volatile. It goes up and down significantly. There's a group of people that have, collected it and have a small amount of it and have a large amount of it and can influence the price of Bitcoin and the virtual currency significantly by trading in and out of it. And there are some things set up now to help businesses limit volatility. So for instance, you can have sort of an auto conversion feature, but even with that auto conversion feature, it could be something where it could be 10, 15%, spikes in value over a very quick period of time, just based on people getting in and out. So it is really volatile. That being said, it's probably not the best means of buying a coffee, but it might be a good way to buy a car. It might be a good way to buy a house. It might be a good way to buy an airplane. So if you're buying something of very significant value, maybe there's a purpose. And also now people are looking to it as an asset class similar to precious metals like gold and silver.
Interesting. In fact, that's what I was going to come to. So yes, transaction is one thing, but do you think at this point in time, it's more used as a store of value, whereas an asset class, for example? So where does that you think lead it to?
I mean, I don't know that I think for some people it's a stored value. I think for a lot of people though, it's still something that they want to trade in and out of. So similar to like maybe some of the Forex markets and speculation around that, or speculation on some securities. Like you look at, stock like GameStop in the United States, where, a whole retail investor class is just pushing the thing higher, but then it, spikes down when there are different margin requirements put in place. So I think, there's certainly some speculation. I think there's more of a group of people that are holding it as a stored value and asset class similar to gold. But, historically, it's difficult to say because it's subject to so many spikes and so much volatility. I guess the argument in favor of holding it as sort of a stored value is that it's not subject to a central bank ultimately printing more money or, changing interest rates or things like that. And because of that, it can hold its value better than currencies.
But then that brings us to an interesting argument, right, about the role of the central governments and of course the central banks eventually. Where do you think eventually it will lead to a regulation when for a matter of fact, this currency is all about deregulation. It's all about the internet. And will it really change, or will it be forced to change its fundamental principle?
Well, I think, Santosh, to a certain extent, it already is. There are a lot of jurisdictions that have come in and have already regulated virtual currency, and including Bitcoin. New York was one of the first jurisdictions as a state in the United States to do so. There are a number of exchanges that are registered there. They're subject to anti-money laundering and sanctions requirements, meaning that you have to provide your identification in order to trade. The exchanges are audited and regulated as well. They look at things like manipulation of the currency, as well as whether they're following terrorist financing requirements, sanctions requirements to check for those types of things, and also ensuring that criminals aren't on the platform. There are even ways to rate the different currencies based on whether or not an exchange was used or an address was used that was associated with crime. And so from this sort of decentralized, anonymous nature of the currency, things are definitely changing. And that change has actually led to driving up the value of the currency because more people are getting involved. And there's less worry that potentially you're going to be involved in an investment scam, or that there won't be proper controls on the exchange and that it gets hacked, like happened to Mt. Gox, which was the biggest virtual currency exchange back in 2014 in Japan, which has also had virtual currency exchanges for a long time. And ultimately, getting people more secure around the currency, having less, anonymity, which could potentially facilitate criminal activity, I think has been a benefit to drive up the price of Bitcoin and other virtual currencies.
Okay. In fact, you brought a very interesting point, and that's about the KYC element or the AML risks that are associated. So are there organizations globally that are really looking into this, this kind of aspect?
Well, certainly the Financial Action Task Force is doing that, which is sort of the global anti-money laundering body which sets standards. The US is looking at that. They're trying to create a protocol which requires, similar to wire transfers or other types of money transfers, that there is an identification of the originator of the currency and the beneficiary if you're receiving it as a payment, or if it's a transfer, the transferee and transferor. And so that would make it much more similar to financial institution transfers today. So like your telegraphic transfer, your TT. That is something that, while the virtual currency exchanges and the Bitcoin community or virtual currency community have been somewhat against to a certain extent because of the compliance cost requirements, it seems like that is going to happen, particularly in the US, and it seems like other jurisdictions as well.
Okay. There's also talk, Josh, about as they call CBDC, or basically central banks backed digital currency, and that's one of the elements which even India is thinking of from a regulation standpoint. So where do you see this digital currency vis-a-vis the current situation that we have on the the Bitcoin standpoint going?
Sure. So, I think, China's been very focused on that, right? I think, given the environment with COVID-19, a lot of people don't want to handle physical currency anymore. Nevertheless, in a lot of jurisdictions, it's still, very entrenched to have cash. I mean, it's interesting, in Hong Kong here, people transact with a lot of cash still. If you don't have cash to go into a taxi or get your hair cut or other types of shop at the wet market, things like that, you're not going to be able to shop there. Nevertheless, there's more people now accepting, let's say, store value cards or other types of transaction means that are non-cash based. But you go up to China, you can't even use cash. I mean, it's like WeChat, and Alipay. It's almost impossible to use cash, even though in China the central bank has said you have to accept cash. So it's gone so far as where baristas in Starbucks can't accept cash, but they'll make the transfer themselves and take the cash as a means for that. So I think central bank digital currency is probably going to gain hold. I mean, it's kind of already out there in terms of institutions and things like that. I mean, most banks don't have a one-to-one cash ratio. If you're getting cash from a Federal Reserve Bank or the Central Bank of India, those types of places, right? Then Reserve Bank of India, sorry. Then ultimately they're not just going to print all of that money. They're going to send it in the form of bonds, in the form of securities, in the forms of digital cash already to those financial institutions. So it's out there already. It's just a matter of actually getting it into each individual person to be utilizing this. And they're already, particularly in China, but also in other jurisdictions, US, India, other forms of private enterprises that are already using forms of digital cash or digital transfers anyway. I mean, a good example is a credit card. You don't even have to have a physical card anymore. You can have it as an app on your phone and you just tap it and the card works.
That's right. Yeah, absolutely. Yeah. In fact, in India, and let's talk a little more India specific, especially in 2016, where we had the the demonetization, whether it worked or not is another story, but at least it gave a lot of impetus, a lot of push for digitization, which if you look at it in hindsight, with COVID coming in, there was a fantastic traction on the digital front. And of course, a lot of central banks have appreciated India's role, the role of the central bank, especially with the UPI, which is the Unified Payments Interface, where India is mature to that to a great extent. So you have governments now even thinking whether we need to ban cryptocurrencies or we should have a regulation. What's been the experience you've had with other, your colleagues, your counterparts in other countries? What's been their view on this?
Well, I don't think that it's probably, I mean, China has restricted for now some time transactions in digital currencies. And yet I think we still see that Chinese make up a significant amount of the market in terms of cryptocurrency transactions on all of the major exchanges. Although they've now moved offshore from China, there's still very heavy yuan RMB conversion ratio for Bitcoin. One of the big factors that's a difficulty for a country like India, for a country like China, is that they have capital controls. And because of capital controls, one of the ways to circumvent them ultimately can be to transact in virtual currency like Bitcoin. So if you can transact and transfer in your home currency, get virtual currency, and then even if you're not holding it, you cash out into another currency, that tracking mechanism, that restriction on the amount of money that you're able to convert on an annual basis can be circumvented. And because of that, that's where it becomes difficult for a country like China or India to have virtual currency transactions if at the same time you're trying to maintain your capital account through capital controls and currency controls.
Yeah.
And so because of that, my thinking is that ultimately there's probably going to have to be some liberalization and some onshore exchanges, and then having them look more like financial institutions that track this type of activity versus the way that maybe an exchange is set up today, which is anybody transacts and everybody does essentially what they want.
Okay. In fact, for our audience, right, who could be interested in investing in these currencies, how does it really start?
Well, first of all, if somebody comes to you and says, invest in Bitcoin and buy Bitcoin from me, I'd be very leery of that. Don't do that. That could be clearly an investment scam. But there are a lot of good virtual currency exchanges out there, like Gemini in the US, Coinbase, are some that I think of here. There's some in Hong Kong under the OSL group. I know that have different controls and have an SFC, like that has an SFC license now, a Securities and Futures Commission license. I'm not as familiar with what the exchanges are in terms of their operations over in India, but I would strongly recommend that if you are going to get into virtual currency, that you do it through an exchange, and you do it through an exchange in a big country, not one based, let's say maybe in Eastern Europe, but maybe one that's out of the US or Hong Kong or someplace else where there's a good financial regulator that has regulatory power over them. And once you do decide to invest or buy virtual currency, one thing that is a big thing is do not hold it on a virtual wallet on your cell phone. If you do, you could get hacked. So that's not a good idea. One idea is to keep it with the exchange. You are susceptible to the exchange being hacked, though, which has happened before, as I mentioned, the Mt. Gox case, but there have been others since then as well. Or you can try to put it into cold storage, which is basically a USB or a digital token that you put in, you hold it offline, and you store it in your house or somewhere else, and that has the encryption code and that has the keys. And then when you're ready to change it, you plug it back in and you put it on a wallet connected to the exchange, and you trade it then. So it's not as easy as trading currency or stock or things like that. There are some security features and security things that you have to look at. But look, it seems to be something that financial institutions are going to be a part of. And once, financial institutions that maybe have deposit insurance and things like that, it might also be easier to continue to hold them on an exchange.
Okay. So if you had a crystal ball, where do you see digital currencies or cryptocurrencies in the next 5 to 10 years?
I don't know. I mean, when I looked at it 5 years ago, I wasn't sure that it was going to be around today, honestly. So I don't know. Honestly, I really think that virtual currency, one of the key factors with it is going to be whether or not you can use it to buy things in your daily life. And if you're able to do that, then I think it's going to gain, more significant adoption. It'll be regulated. It, will have, different controls and requirements associated, audits, all these different types of things that you would, associate with your standard financial institution, and kind of go from there. I don't know. If it doesn't gain that adoption, I think that could still hold value as gold.
Absolutely.
It's also, one interesting thing that kind of comes up now is, now sort of the environmental issues, as well as everything needs to be green and, control for the environmental issues. Virtual currency, and particularly Bitcoin, is not environmentally friendly at all. The amount of electricity that it uses could power countries for a whole year. And that's just the computing power it needs to transact in one day because of the decentralized processes that are associated with it. And the transactions being cleared by a network of different computers. And so, I think that will also be a challenge, is how can virtual currencies, particularly the ones that are decentralized, as you mentioned, the central governments are looking to get involved as well, are able to do it in a more environmentally friendly manner.
Absolutely. Hope so. And we look forward to see what exactly happens. Josh Heileiczer, thank you so much for joining on The Sound of Money.
Great. Thanks a lot for having me, Santosh.
And that was Josh Heileiczer, Managing Director, Protiviti, Hong Kong. And we'll come once again another episode of The Sound of Money in coming weeks. For now, from me, Santosh, and Josh, thank you so much for being with us on The Sound of Money.
Sound of Money with Santosh Sirur.